NFRA has fined 50 lakhs to an auditor for lapses in issuing a Form 10DA to a company. A Form 10DA is related to Section 80 JJAA of Income Tax Act. So let us quickly understand what 80 JJAA is. It is an incentive given to employers and businesses to increase the employment in the country, foster creation of new jobs, etc. The deduction is 30% of the additional employee cost over 3 years, which in effect means that 90% of additional wages for 3 years can be claimed as a deduction. Now, this section is very specific regards to definition of additional employees and additional employee cost. Additional employees are those which increase the number of total employees as compared to the total employees were there in the previous year. And the additional employee cost is the total payment to such employees, not just the salary, paid through banking channels. There are a few conditions, as are with all other sections. So the businesses, from the company point of view, the business should not be formed by a splitting up or reconstruction or acquisition of an existing business. It should be operational for more than 240 days, and it should employ at least 10 employees. It should be liable to tax audit. And of course, the ITR filed to claim such a deduction should be filed within the due date. And finally, a CA has to certify under Form 10DA that all the conditions have been followed. Now, from the additional employees side, these are the conditions. The total emoluments to the employee should not exceed 25,000 per month, should be employed for more than 240 days in that year. And in case of certain manufacturing industries, this 240 days is reduced to 150 days. The employee should have participated in a recognized provident fund, and the government should not have paid the entire contribution of PF for the employee. If all of these conditions are fulfilled, the business can go ahead and take 30% of additional employee costs as a deduction under Section 80 JJAA. Now, coming to the NFRA's recent order in the case of the assessee Quest Corp. Quest Corp is a listed entity, and the NFRA was the case of 80 JJAA mismatches was highlighted by the department to the NFRA. And upon further investigation, these were the failures or lapses which were found. First is they failed to verify whether the business was formed by reorganization or not. They relied on an MRL where for no reason, even though the annual reports clearly said that there were several acquisitions during that period, they failed to exclude the employees whose contribution to PF was paid by the government. If you remember, that was one of the conditions which was given for the employee, this condition, the last line. The total additional employees and total employee cost was not calculated correctly. So there were several lapses. This was explained away as an interpretation thing, but basically the condition wherein additional employees should increase the total number of employees was ignored by the CA while certifying that additional employees are actually there. There is also a concept of spillover where it says that if less than 240 days are there, you can consider that employee as a new employee the next year. So they took shelter of this provision to say that there are additional employees, but they overrode the main condition which said that additional employees should increase the total number of employees year on year. On similar lines, they failed to verify a very basic thing, which was whether it was paid through banking channels. And also they sort of misinterpreted the very clear monthly limit of 25,000 per month by saying that 25,000 when calculated over a year is 3 lakhs. So through all of these failures or lapses or very casual sort of certification activity undertaken by the CA, it was clear that the actual conditions were not met. And that is why the fine of 50 lakhs was levied upon the CA. So through this, there are several general learnings that we can take away. One is obviously how much can you actually rely on a management representation, and how is each certifying activity to be approached, and of course, what is the end goal, and if we are actually fulfilling that. That is something I think we can all take away, irrespective of what the exact assignment is. Additionally, additional to the section and the penalty, there's another small issue as to whether the NFRA was within its jurisdiction to levy such a penalty and investigate this matter. Right. The NFRA, being National Financial Reporting Authority, is largely understood as governing the matters of accounting and audit in India. And the section 132 of the Companies Act is what empowers NFRA to look into such matters. Here, if you see, it says has the power to investigate blah 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 for such class of body, corporate, or persons. And NFRA rules further elaborate on these class of bodies and persons that can be investigated, wherein it clearly mentions monitor and enforce compliance with accounting standards and auditing standards for listed entities and several other entities as well. However, there is another rule 2 of the NFRA rules, which says that auditor includes all of this, who has been appointed as an auditor for a company or body corporate under Section 139 of the Act or under any Act for the time being in force. So it seems that the NFRA is taking this last line as a shield and saying that any CA appointed under any Act can also be probed. However, if you read it, it is very clear in its interpretation, at least to me, that only if you are appointed as an auditor under any other act, this will apply, and not to any chartered accountant appointed for any other purpose. So there has been some talk among professional bodies as to whether this order is within the jurisdiction of the NFRA or not.
But
Uh,
it's an assurance, this thing, right? Assignment which he was handling, right? Whoever
yes.
the chartered accountant, right? So isn't it in line with, certification or an act of auditor, which he was supposed to perform diligently?
Or any other act for the time being, but that is not for an auditor. That is
Okay.
who has
You're
been
telling
appointed as an
as per
auditor.
the definition of auditor, this is what is covered, and this is what,
Mhm.
either in the body corporate or any other act in which is being in the force,
Correct.
right? Not any other assurance assignment like due diligence or certification falls under this ambit. That is what.
Yes, yes, yes.
Okay.
So the purpose itself is accounting and auditing. And then here, so here, if you
Mhm.
see under any other act, this last line of the first point,
Mhm.
that is more like auditors who have been appointed under other acts.
Any other act, right? Right.
Yeah.
So,
That.
but the ATJJA certification,
Mm.
Neha, requires, I think Income Tax Act requires to get a certificate from a
Chartered
chartered
accountant.
accountant.
Yes.
So cannot don't you think that should not be construed as, an appointment, not auditor, but of course I get it that, it's not an auditor, but it's an appointment via an act,
Mhm.
which is enforced for a specific purpose,
But both of
right?
those
So,
conditions, in my view, have to be fulfilled, auditor and under this act or any other act.
okay.
And that would actually open the floor to a lot many more certifications or limited reviews that accountants do, where it would not exactly be possible to get that audit level of assurance. So
Okay.
if that was the intention, it's a different thing. But upon reading of the act, it seems
Yeah,
like a
act. Okay.
overstepping.
Got it. Got it.
Okay, so that is all for my presentation. Any questions, guys?
Neha, sorry, on the last part. So you're
Mm-hmm.
telling that when NFRA's jurisdiction is sort of questioned, that whether they can do this. So what is the conclusion around that?
This is open to debate as of now, unless the company initiates any counter legal proceedings that it's not valid. I don't think
Mm.
we as external parties can do anything more than speculation.
Mm.
But
No, I'm just
several,
trying to see that you're telling that in our view, NFRA
yes,
doesn't have the jurisdiction to do so.
in my view, but of course,
No, what
anybody
is the
who has.
reason here? Because auditor means an individual or a firm, including an LLP incorporated under the LLP Act or any other act. Auditor, for the time
Who
being,
has been
enforced
appointed as an auditor of a company.
a company or a body contract under Section 1. The time being enforced. So, what was the background of the case? Sorry, I was on a client call when you guys started, and I missed on that. So basically, 80 double J certification was given by the CA,
Yes.
and the income tax authorities forwarded it to the NFRA. That is what has happened.
Yes, yes. The Director General of, I think there's an investigations director, right? He had,
Hmm.
at the time of scrutiny assessments, forwarded this.
Okay. To check on the sort of validity and the authenticity of the certificate.
Yes, yes. Rare moment of communication between government authorities, which was very sort of fruitful, I would say. But yes.
Mm-hmm.
I think the income tax officer, or the official at the income tax department had already identified that this is a lapse, and ideally we should disallow 80JJA. He went a step ahead. This last lapse, or this, we have come to this stage because a person who is certifying or signing has not uh,
Like not
done his
exercised
part.
his,
Right,
yeah.
done his part right, and let me just report it to NFRA, because anyway the authority has been formed and they are looking into such things, and that is what I think it's.
Right.
Okay, okay. Any other questions anybody has? Looks like no questions. Okay, so name one other thing which just came to my mind. You said employee provident fund not contributed entirely by government,
Yes.
right? Is there something like that? Because I wasn't aware. Is there something which is
Yes.
being completely contributed by government on both fronts, be it
Yes.
employer
Yes.
and employee?
There are certain incentives given to small manufacturers and things under this PMRPY scheme, Pradhan Mantri Rozgar something Yojana, where again, to encourage employment, government is bearing the entire
PF.
brunt. Yes, yes.
Okay, okay, okay. And one other thing on the NFRA, what we have heard is, I mean, see, this is again NFRA similar to uh, PCAOB of outside, right? Which is there, in US and all that, which is an authority to sort of monitor the the work which the CPAs or
Mm.
the laws which are being followed, right?
Yes.
And
Not
such
exactly.
act,
I think ICAI could also be considered to be that authority, right?
ICI is an institute which is made by members for the welfare of the members. This is sort
Okay.
of a regulator authority which sort of monitors the work of the members of the institute. This is what
Mm-hmm.
this is. So, in terms of this, as ideally PCAOB or whatever, they sort of give a advisory or a warning, right? When there is a such lapses or such things which are not followed.
Mm-hmm.
But whereas this investigation coming out and uh, directly penalizing a chartered
Mm-hmm.
accountant to an extent of 50 lakhs, uh, I know you covered that, NFRA, whether it is overstepping or not, and there is a debate going on.
Mm-hmm.
Apart from that, let's assume NFRA has the authority and does it. Should
Mm.
it directly penalize, or should it, is there something which, as a first time default, right? Or,
Mm.
as a first lapse, is there a like a like yellow
What
This
card
is
or a red card or whatever, something like that.
what you're talking about is, Nitin, basically ICI has some guidelines around that, wherein they give a
No,
warning.
and
But
correct.
this
I
is
see,
NFRA.
and correct, understood. But does NFRA say that if you find anything, we just penalize it straightforward without
And I think there's a
considering
news
anything?
that he's already debarred for 10 years.
Oh, is it? Sorry, I don't know about that. But a little more light on this I can throw, wherein it was found. So it is not a mere mistake or the fact that the conclusion is wrong, but the order mentions that they also looked at the work papers and workings and they have asked for all those supporting things. And it was found in many cases that not a single employment contract was looked into, not a single investigation of any of these points was done. So it was more seen as a lapse in effort rather than outcome by the NFRA. So that is why they took it all the more seriously. So if it was a misinterpretation which was substantiated by work, they would have been more lenient. It was more of you made a mockery of the whole process. So that is why we are penalizing you strictly, strongly.
Got it, got it. And I think other angle is that it came from income tax department. Unfortunately, I mean, it's sad
No,
that
and I
it
think
had.
also the value is quite huge, right? We're talking about 950 crores here. The
Yes, yes.
deduction, the deduction amounts to 950 crores.
Is it?
Yeah.
Yes.
Oh man, okay, okay. Yeah,
So
yeah. Quest Corp being, I mean, it's a huge
yeah,
Listed
it's a listed
entity.
organization.
Yeah.
entity.
Right, 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 right. Right. So okay, I think we all got the sense of where why the NFRA has been formed and how it is very, very important that our profession in terms of the work which we carry out as a chartered accountant and certify something or audit something or follow certain accounting standards, how diligently it should be taken care so that those lapses would not result in something like this, right? Uh, if if entire process has to be documented and audit trail has to be formed, it has to be formed. There's no two ways about it. And in terms of delivering also, uh, like Neha mentioned, just MRL, just the client saying that okay, we are good, we have taken care of all the regulation compliance is not the end. It should not be the only way forward, right? So that is what it is. Okay, thank you, Neha. I think I don't have any other questions. Anybody has any other questions, they can. Otherwise, we can move to the next topic.
No, can everyone come up with one takeaway point from this? What is the takeaway when when we are doing audits, when we are doing any sort of certifications or I want everyone to come up with at least one point.
Uh, okay, I'll go first maybe. One
Yeah.
takeaway that I can clearly see that I think due diligence is very important for any chartered accountant while going for any audit or any kind of services. And be it subjective, because see, maybe for a CA firm, due diligence can vary at different levels. We think that okay, checking 100 samples for 10,000 of entries would be enough, but maybe for others it would be 1,000 out of 10,000. But despite of this subjectivity involvement, still I guess
And
we have
also,
not.
yeah, sorry, Kanya, please
Yeah,
finish.
so despite of this subjectivity, we can see that NFRA has gone straight and put a penalty of 50 lakh. So I think one is due diligence and other is because Neha also mentioned about this working papers. They have also checked working paper. It means somewhere if we think that we have done all our audit findings and everything, but not proper documented, it could lead to a situation where we can be questioned or we can, come in that spotlight.
Yes, totally. One more thing to add, what Kanaya told to us, materiality, right? When we say 10,000, may say 1,000 if you're checking, whether it's covering 90% of the 10,000, it's good enough, right? So that is something which is subjective, which we should be in a position to apply our mind and thoughts and see, okay, how much is covering what. So that is what it is. So the concept of materiality also plays a good role. And yeah, I mean, like you said, uh, work papers is something which cannot be sort of taken leniently. Though we are in our firm in Bion Advisors, we are doing end to end everything for the clients. It is like, we are doing accounting also, we are doing compliances also, we are doing, financials, auditing, of course, to an extent. So, but you know we should exercise even more sort of I would say due diligence in these cases, because we tend to miss here when you're handling the client for such a long time, and you tend to sort of restrict your thoughts. The thoughts are limited, you are not able to think beyond that. So it becomes all the more important here.